Poised for Exit is a show for business owners who want to achieve a successful exit based on their own terms. Your business exit will likely be the biggest financial transaction of your life, and for most, you'll have one shot at doing it right. The topics and guests we feature and the stories they share will provide valuable ideas and strategies to improve operations and grow enterprise value so you can achieve the best possible exit outcome. Now here's your host, award-winning certified exit planning advisor, Julie Keys.
Welcome everyone to the Poised for Exit podcast show. Our guest in this episode is a female founder and managing partner of a private equity firm whose company mission is to leave businesses in better shape than they found them. You are not going to want to miss this story. We're going to hear from her right after these brief messages from our show sponsors.
Are you a business owner getting ready to transition? If so, I recommend True North Mergers and Acquisitions as your confidential strategic partner. They understand your business sale isn't just about one buyer and the price, but what you net that counts. In other words, what you get to keep. When you're ready for a higher level of representation that delivers consistent results, contact True North M&A to do the heavy lifting of selling your business. Learn more at tnma.com. That's tnma.com.
Exiting your business is a big deal, both financially and emotionally. I'm John Marquet, certified exit planning advisor with TrustPoint. We help business owners transition smoothly on their terms. Our focus is on maximizing value, minimizing stress, and giving you confidence in what's next. Whether you're selling or passing the torch, we make the process seamless. Start planning today at trustpointinc.com. That's trustpointinc.com.
For business owners, it can be overwhelming to start planning a transition or exit strategy, but it's so important to avoid unwanted outcomes and unexpected tax bills. The CPAs at JAK, John A. Knutson & Company, can guide you and help make sense of the numbers. Our firm was established over 90 years ago, and we've assisted countless companies with ownership transitions. Leaving your business is a process that takes time. So contact us today to discuss your situation. Visit our website at jakcpa.com. That's jakcpa.com.
My name is Todd Grau, and I'm the president of the Twin Cities Exit Planning Chapter. If you're a business owner and advisor and want to learn more about the world of exit planning, you're invited to visit the Twin Cities chapter of the Exit Planning Institute. You can expect top-level education delivered by subject matter experts at every monthly meeting. Grow your network and draw from the learning that could be a game changer for your business or your practice. There's no pressure to become a member, so come and see what the buzz is all about. Our meetings are held the second Wednesday of the month, 7:30 to 9 a.m. See the show notes for more information and registration links.
Hello, Poised for Exit listeners. We are here today with Leah Berend, who's the founder and managing partner of Marrin Investment Partners. Leah, welcome to Poised for Exit.
Thank you so much, Julie. Your podcast has such an amazing following and you do such an amazing job. And so I'm just delighted and honored to be a part of it today.
Well, thank you. Thank you for taking the time to join us. I've been excited to have you on the show. Like you're the queen of private equity here in the Twin Cities. So, you know so much about it. And so this is a really, really, really going to be great. I know it's going to be a lot of guests out there really interested in this content. Sure. But before we dive into what we're going to talk about here, I'd just like to have you share with us, how did you get to where you are now? Like, what was it about private equity that spoke to you? Or I'm sure it was a journey and probably not a straight one, huh?
Yes, absolutely. I landed in private equity. I did not choose it, but it chose me in a way, and I found really the culmination of what I had been working on my whole career. The first bit of my career, I was in management teams in small to mid-sized companies, making it happen, being an operator, rolling up my sleeves, doing what needed to be done in the business, no matter the job title. And I've always taken that into everything I've done and just tried to move things forward. I have a background in organizational leadership, a master's in organizational leadership and a master's of accountancy. And so I've really married what it's like to run a business and work in a business with kind of the financial pieces that need to be focused on. And I got into private equity first through an alternative investment due diligence firm that I was working at. And at the time, I didn't know what an alternative investment was, and I didn't know what due diligence was. But I was working as their controller and chief administrative officer, and then reporting the financials to the board in kind of a CFO capacity. And really just learned that industry of the whole opportunity there is outside of the stock market. And
Yeah.
it's a big industry. There's trillions of dollars going into the private markets. And that could be real estate investing, that could be private credit, that could be private equity, the oil and gas, the list goes on and on and on.
Of course.
And so I got to see firsthand the sponsors behind these deals, the people putting them together and who they were as people. And then I got to see what they were offering, as investment opportunities. And so it was just the best exposure across asset classes to be able to see, what do investors want? What ultimately makes the most money, and just kind of marry those two together. And that was so fun for me. And then from there, they went through an ownership transition, which I had never been through before, and that was rocky. And I went to a guy who was on the board really as a favor to a buddy at the time. He was so generous with his time. And I went to him and I said, I am in this ownership transition. It's so tumultuous. What should I do? And he said, well, I need a chief administrative officer and chief financial officer. And I said, okay. And that was Lauren Unterseer of Oxbow Industries. And so that's how I got into private equity. It wasn't because of some fancy resume with an Ivy League degree attached to it. It was just through connections. And he knew that I was a hard worker, that I, was running the back end operation of that company. And I did that at Oxbow. The thing, though, was that even though I love the operating piece of it, I fell in love with M&A, and I fell in love with the investment side. And it's really intrinsically within me. As a little girl, I would look at the stock tickers on the newspaper and wonder what that was. So I've
Really?
always been wired that way. And so when I found, that I not only did I love the deals, but I was good at the deal kind of cadence and process and understanding the psychology behind it, man, I went full on and formed Marrin Investment Partners and launched my own firm.
Wow.
So that's my story.
Awesome. Awesome. And I love the story about Marrin. Inspired by your grandmother, who sounds like she was an amazing woman.
She was a 4'11" powerhouse. And you'd never know. You'd never know the struggles that she went through, because she carried herself with so much grace and elegance and love that she had 7 kids, and she was a dedicated wife and mother, but then also studied 4 different languages in college in the 1930s, when not a lot of women were going to college. So she has a great background. And so many private equity firms, no offense, but they're named after rocks or water or something like that. And I really wanted to be a little different and hit a little closer to home. So
I love it.
I chose my grandma's last name.
Oh, that is fantastic. And she is smiling down on you, girl.
She is.
Oh, yeah. She's got to be so proud. So as we have had this conversation a couple times now, I think, about private equity and a lot of the trepidation that many business owners have over just thinking about it, because it's gotten a bad rap, right? And rightfully so in many situations. But, let's talk about that. And then how do you help alleviate that type of concern?
Yeah, that is such a great observation. It has gotten a bad rap. Private equity has an amazing history. It kind of started in 1946 after we were rebuilding from World War II and rebuilding the economy. And so that's when the first leveraged buyout was. And that was done, Jerome Kohlberg, who was the founder of KKR, small little firm you might have heard about in the private equity firm. It's one of the largest now. He actually left KKR in the 1980s. He agreed with this whole premise of like being a little cautious around private equity firms. He left, and at his last shareholder meeting, it's documented that he said, if you remove ethics from private equity, you kill the golden goose. He went on to form Kohlberg and Associates, which is a great firm that has run their own kind of buy and hold approach to private equity. I would say this, it has completely proliferated because so many fewer companies are going public nowadays. There are 4,000 private companies. That's it. I'm sorry, public companies. And there are millions of private companies. And so
True. Yeah.
in terms of an investment class, it's only growing. And then the private equity firms that are in the market today, I mean, there are more than 8,000 private equity firms. And if you've met one, you've met one. And unfortunately, there are so many differences and differences of how people work. And the biggest thing that you can do as someone selling their company and considering a sale for your company is do as much due diligence on us as we do on your business.
Amen to that.
Because it's it's a trust building exercise. It's a marriage. You don't rush into a marriage without asking who's your family, right? Who have you worked with in the past, right?
What's your favorite color?
Yep.
Yeah, sure. Yeah, definitely. Gosh, good advice. Boy, that's amazing. Yeah, I think that so many times sellers feel like that due diligence is a one-way street. And, I've had clients who've said, well, how do I find out more about this buyer? And I'm like, we are going to do as much digging as we can here, right?
Yep.
Yeah, it has to be a two-way street. Everybody has to win, otherwise it won't work, just like you said before, you kill the ethics and you kill the golden goose. And that's a powerful saying. And you have your own podcast show called The Future of Private Equity, which I think is brilliant. And I loved the story that you told on the last episode that you just alluded to about how it all got started right after World War II. That's, I bet a lot of people don't even realize that. And there's so much more to know about it. So how do you frame the conversation? Like, what are some of the recommendations that you would make to a company today who's looking at possibly this option for either a full exit or a partial exit?
Yeah. I'm going to start with a really sad story and go from there, Julie.
Perfect. Yeah.
Spring of last year, I met a wonderfully nice lady who was out of California. She had an amazing business, a manufacturer. 3 years ago, that company was doing $70 million in revenue. She and her husband were running it, and they were successful as all get out and loving life. Unfortunately, they didn't have a clear succession plan. They didn't have a clear exit strategy. And the husband, who was in charge of sales and marketing and who had found the company, he died of pancreatic cancer within months of being diagnosed.
My goodness.
And this woman, grief stricken, because how else are you supposed to act without a plan and without, any idea of what the future holds?
Yeah.
She rejected several offers to sell, just saying, I'm just going to hold on a little longer. Well, when I finally got to talking with her, she was auctioning off the assets of her business for $5 million.
Oh my gosh.
And so think about that. You not only have the loss of their own generational wealth, 5 million is still good, but not anything close to 70 million.
Yeah, exactly.
So you have the loss of generational wealth, you have the loss of a company, but not only that, you have the loss of an economic, source for the community, right? I mean, the people who benefit from that business being in that community all suffer because of that loss.
Yes. The ripple effect of a bad exit is far reaching, for sure.
Exactly. And so the best thing that I see when I walk into a meeting with a prospective business owner that's interested in selling and interested in a transaction, the best thing that I see is when someone has a clear plan of what, and they've done the work to say, this is what I want. Not I'm open to anything, not I'm in an emergency situation and I have to get out. It's this is what I want to happen, and clarity around that. Because I can't give them what they want.
Right,
And I'm not
right.
going to spend, 5, 6 iterations of a letter of intent trying to get to what they want. And so the best, most efficient way to do this is to say, here's what I'm looking for. This is the valuation I want to get to. This is why I feel that my company warrants that valuation. And I either want to exit completely or roll over some equity or still have control. Those
Mhm.
questions have to be answered before I walk into the room. Otherwise, it's going to be a song and dance and the deal is probably going to die.
Sure, sure. Well, everything that you just talked about is really what the work of an exit planner is supposed to do, right?
Yeah.
So business owners should work with someone who has that expertise and can walk them through, because that takes a long time to get to, I don't know what I want, to I know what I want,
It
right?
does.
And
Yep.
there's so many things through that discovery process that have to be done so that we can figure out what is on the table still and what's off the table, right?
Yep. And it's not just the logical decision making,
Of course, big
it's the
time.
emotional reckoning that you have to go through in order to be okay with the outcome.
Yeah,
And
right.
it's got to be both of those things.
Definitely. So tell us about Marrin. I want to know, how does your company operate? How are you doing things differently? So excited for you, by the way.
Well, I call Marrin kind of a little fledgling firm. We started last year. Our goal is to become a fund and do this on a larger scale. And right now, we're in the beginning stages of getting to that point. Like I said, when you're doing due diligence and you have investors, doing due diligence on you and potential business sellers doing due diligence on you, you have to have a great track record and you have to have a wonderful reputation. And so
Yes.
that's what I've been working on and building out. We
Mhm.
invest across industries. I would say where we play the most is in manufacturing, distribution, professional services, and then we're doing some in the consumer services as well. And
Okay.
so really across industries, um, generally we invest in companies that are between 1 million and 10 million in EBITDA, which is the earnings before interest, tax, depreciation, and amortization. And
Uh-huh.
so that's generally where we're investing and spending our time. And we see there is so much opportunity in that space,
Yeah.
and we're just trying to find the best fits.
Mhm.
One thing that's a little bit different about Marrin and what we do after we buy a company. I got a question yesterday from a business seller who's like, well, are you taking over my office? Like, what are you going to be doing? Right? I get
That's a
that a
good
lot.
question.
What are you doing? And
Well, you're not
and
making coffee, probably, right?
right. I might. Well, and here's a true story. I purchased a med spa and I'm doing a roll up in the med spa industry. I went back and organized the back room because I was like, hey, this needs to get done. I'm doing this, right?
Wow,
But
right?
I'm not promising that for everything. And that's not exactly what I meant when I coined the phrase private equity as a service. But it's just I love to roll up my sleeves and I love to see tangible work get done too. What I do in the business is not only, does it come with the transaction side. Once the transaction is done, I'm kind of the asset manager. I'm the babysitter of that business. And so I'm making sure that the governance around how we make decisions is there and in place. We always put a board into place. We always try to seek the industry experts who are going to be inputting their expertise into the business. And so I'm operating on a board level. Yes, I go in and I organize the back room, but I also say, who are the people that are going to be best suited to run this company.
Mhm.
And so sometimes we're putting in a new CEO when that CEO has been the founder and business owner. Sometimes a firm has a clear succession plan in terms of the management. They just don't have a clear succession plan in terms of the ownership. And so what I do then is operate from a board level, make sure the governance is there. Obviously, I'm reporting back to my investors. So there's a lot of kind of system and process around that. But then I'm going, from a board level and I'm saying, you know, what are your people, processes, and systems looking like? Where can we upgrade things? Where can we get efficiencies? And most of all, one thing that we do at Marrin that differentiates us is we have a strong focus on the employee culture. Because back from my organizational leadership background, I know as an operator, when you invest in the employee culture, your revenue is 4 times that of your competitor that doesn't have a strong employee culture. It's that important.
I
So there
agree.
are,
I'm sure.
yeah, tangible evidence and studies show this, but it hasn't been a focus in private equity in the past. They do financial engineering, they do operational efficiency, but where's the employee culture aspect? And it's
Right.
the hardest nut to crack, but that's really what we focus on because I'm a little bit of a futurist, and I think that what I see in terms of demographic trends of, lots of baby boomer generation, not being able to replace baby boomers in terms of size and volume of that generation for quite a few years from now, we're going to see significant skills gaps. We're going to see a significant shrinking of the labor market and pool of eligible candidates. And
Right.
so it's going to be even more important to be an amazing employer, because why
Yes.
would they leave if they feel like they have autonomy and they can contribute and they have a voice? And
Yes.
so to me, that's what the future looks like, and why I've named, my podcast, The Future of Private Equity, because it's all about culture being a value driver.
Yes, it is such a value driver. I agree 100%. And I am concerned about the workforce issue too. There's a lot more that we can really unpack here and talk about. I wish we had the time. You'll just have to come back on the show because I got more questions for you right now. So, yeah. So, your show, let's talk about that. If I'm a listener of your show or I'm listening to this episode and I'm thinking about selling my company in a few years, what are some of the things that I should do to get ready, especially if I believe that private equity might be on the table for me?
Mm, that's a great question, and one that I get often.
Yeah,
There's a lot of ways to exit your business that
of
you should
course.
be informed about, right? And that's where exit planners are so helpful. And if private equity is an option and on the table, have the right team around you in terms of the M&A attorney and the financial advisor and the exit planner and just all of the folks who are going to be very well experienced in the exit process. The last thing that you want to do is bring, an attorney to the table who may be great at general practice, but just doesn't specialize in M&A, because the seller is going to end up spending a lot more money on legal fees as well as the buyer,
I
just
know.
due to the language we use and the speed at which we, try to get things done. It's going to stall the deal and you're going to spend more money. So to me, it's about
So true.
forming those relationships early, getting your books, in terms of your accounting. If you're doing cash accounting, oh, please
Hmm.
move it to Gap, do the work behind getting it there. The transactions that have really gone well are the ones where the seller really tried to make it easy on themselves and easy on others in order to get a transaction done. And it's amazing how fast something can go and how quickly, because everybody struggles. If something is drawn out and long, you get deal fatigue, you act irrationally, and you
Yes.
and you break relationships. And so
Right.
it's really important, once you've chosen to make that transaction happen, that speed to close is a really big piece that just psychologically keeps you motivated, keeps you kind of working towards an outcome, because so many things can stall that process. And the last thing you would want is your processes and systems and accounting practices to be the holdup there.
Yeah, right. Yeah, there really is a lot. I kind of like to call the work that I do pre-due diligence because it really is. And it really does make for easier due diligence when you've kind of got things buttoned up ahead of time and just be thinking about those things. So if a buyer really cares or a seller I'm trying to think of like the culture, like you were referring to the culture before. They really care about their culture, but they're thinking about selling and they want to make sure that things are taken care of. How do we assure that that's going to happen for,
That
the people that they're leaving behind, right?
Yeah, that's a really good question, and one that I don't have a clear answer on, to be honest with you. I would say, the biggest thing you can do is choosing the private equity firm before they choose you, or just hunting
Mm,
you down, or the strategic buyer, right? It could be that it's a strategic fit and you know it and you have that relationship. Um, but the biggest thing you can do is being well networked in the space, in your area, or if you're thinking it's a much bigger deal and you want to open it up in a formal process, you can do that, but the timeline to be able to do that due diligence is a lot faster. And so I would say, if you want your employees to be incentivized, create those incentive structures now
yes.
versus, waiting for the private equity firm to do it later.
Sure, right. Yeah, like the stay bonus strategy, which,
Yep.
it's kind of a band-aid, right? It's really not, yeah, it's not proactive at all, but I've
Mhm.
seen it work.
Yeah.
So one more question. What's one thing you hope every business owner understands about their own exit, whether they're going to sell to private equity or not?
I think what I mentioned before about how, yes, logic needs to come into play. You need to have a logical plan of how you're going to execute an exit, but also just recognizing how deeply psychological it is that your identity has been wrapped up in this business for a long time, and you're going to be extracting yourself from your identity. And
Yeah.
so there's just some work that has to be done there, in terms of just dealing with the emotions that come up, the things that are going to hold you back from doing a deal that are so deep down inside. So I know I'm
Yes.
getting really touchy-feely there, but it's so tangible, and it's something
Yeah.
that struck me so hard when I entered this world of deal making, is just how deeply psychological it is.
Oh my gosh, yeah. I think it's more emotional than it is logical.
Yeah.
When you founded something that, started with nothing, right? And you built it into this thing, it really does. I don't care how hard you try, that is part of who you are. And
Hmm.
you really have to figure out, like, okay, who am I without my business? I even had to ask myself that many years ago when I had my
Hmm.
own exit, and it was not easy. And you think it's just a man's thing, and it's not. I mean, I'm thinking about the client that you mentioned that hung on after her husband died. She probably
Yeah.
was hanging on to his memory, hanging on to
Yeah.
what she thought he probably wanted, right?
Yeah.
Not necessarily knowing what she wanted, right? And so those are definitely things we need to be proactive about. So
Hmm.
yeah, I have a gazillion more questions for you, Leah, but we have to go. So we're going to have to do this again for sure. So thank you again for joining us and for sharing your wisdom, and congratulations on Marrin. And there's going to be more to come. Can't wait.
Thank you so much, Julie. I so appreciate the opportunity to be on your podcast.
Absolutely. And thanks, listeners, for joining us. We really appreciate your sharing and commenting. Let us know what you think of this episode and join us again next time.